Yo, what is going on YouTube? It's Evan Trades. I know it's been a while, and in these past 3 months I've just been away, just dealing with some personal stuff and just really improving my trading and really trying to, you know, really change it for good and really lock in. And um, I really wanted to make more videos for you guys. I just needed to like lock in more and really put in some more work than what I was already doing. And that's what it takes to really make it in this. And um, I feel bad essentially, but I just want you guys to know there's more videos coming out for the people who really do like enjoy the videos, the educational videos, and all that. And I just do want to say I'm not a financial advisor as well. In any way, I'm not a financial advisor. I'm just teaching based off experience and what I see in my opinion. Um, anyways, but yeah, I hope everyone is doing well. Happy 4th to everyone. Well, it's 4th tomorrow, technically. Um, but I hope everyone has a good 4th, and I hope it goes well. And hope everyone eats some good food and stay hydrated too. Because where I'm at, it is extremely hot in Cali, Central Cali. It is extremely hot. So hopefully everyone stays cool. I almost said warm, cool, and yeah, stay hydrated. All right. I hope everyone's doing well. So in today's video, what we're going to be going over is basically what I've learned in the past 3-4 months. Um, this credit goes to Justin Werling. I don't know if maybe some of you guys have heard of him. Um, this is how you spell his name. All the credit in this video goes to him. I'm in no way stealing this, claiming it is mine. This is all his. I'm simply just passing on the information that he's learned and how I've interpreted it and used it in my trading to make me a better trader and see the markets differently. So that is his name. If you guys want to go check him out on X, Twitter, whatever you want to call it, YouTube, Instagram. Check him out, please. He's an awesome mentor. He is an awesome trader and teacher, and he has good quality and good teaching qualities in his video. Good lessons. So, getting right into it without wasting time, ladies and gentlemen. So, what I'm going to be teaching you guys and explaining to you guys today is a little friend called market maker buy models and sell models. And I'm going to be talking to you and explaining to you how I use it in my trading and how it makes me get daily bias and helps me, uh, you know, trade better overall. So market maker buy models and sell models, without going too deep into them, I'll have to make another video specifically on them. So a market maker buy model is kind of looks like this, right? Market does this, come down, okay. We sweep some type of higher time frame or lower time frame liquidity, doesn't matter because time is fractal, okay. Come back up, trace, and then we retrace back higher, taking out the original consolidation or original liquidity, right? So this is a market maker buy model. That's what you call it. It's not going to look perfect like this uh, the whole time, but essentially this is what it looks like. A sweep of liquidity or retracement back into an imbalance. Some form of liquidity, because fair value gaps are also liquidity. So, and a market maker sell model is essentially the same thing, just flipped. So let me draw that out for you guys. So that's terrible. Okay, that rally up, take some type of sell side or buy side, and then a retracement, or either maybe a retracement back up into an imbalance. Okay, then we get a tracement back down, taking out the original consolidation liquidity. This is essentially a market maker sell model. And I'm about to blow your guys' mind right now who don't know this, but since time is fractal, this happens on every single time frame, no matter what time of the day or what time of the year. Boom! I just blew your guys' mind. So, sorry, I had to mute my mic. I had coughed my lungs out. Holy crap. So, yes, this happens on every single time frame, no matter if it's the 1 minute, 5 minute, 7 minute, 15 hour, 4 hour, daily, weekly, monthly. This happens every single day. Okay? And I'm going to explain that to you guys in the example that I have for you guys. I would show you guys more examples, but the video would just be way too long, and I'm already expecting this to be a long video by itself. So I'll try to make it quick and helpful for you guys. I owe it to you guys. It's been a while. I missed you guys. So, all right. In this case, we're going to be going over the market maker buy model. And okay. So here is, we're going to be going back to Monday, July 1st. Today's the 3rd, so a couple days ago on Monday. I believe I did trade this day, yeah, Monday, a couple days ago. Yeah. Okay. So to usually get your daily bias, right? Your daily bias, I typically start out on the daily or the 4 hour. So what do we got here? In previous videos, if anyone remembers, we talked about internal to external range liquidity, right? This is a huge factor in this overall market foundation that I am about to teach. And if you don't know or haven't watched the video, please go watch my video on it. It will help huge in when you watch this video. So internal range to external range. It's literally what the market does every single day. Market maker buy and sell models and AMD, accumulation, manipulation, distribution. All right. So going into the day, on this day, I was extremely bullish because, well, or on the daily here, come up, created a high, come down to internal range liquidity, which is this fair value gap, because fair value gaps are liquidity. Okay. Then what's our draw on liquidity after we come into here? The external range liquidity right here. Oh wait, oops, right here. The high that we created before we went down is our external range liquidity on this time frame, in this range, on the daily. Okay. Now, after this, I zoom in again to the 4 hour, try to see if I see anything more specific. Okay, so I see that we came after we reacted off this daily, we just placed up. Okay, we tapped into this 4 hour. All right, then we placed back up Friday, and then Sunday and the overnight we dumped down, retraced back into it again, and we came and swept sell side. Okay, so this is a model in its own. What do I mean by that? Well, the same thing that happened on the daily happened right here in this range on the 4 hour. Okay, came up, created a high. This now becomes our external range liquidity. Okay, come and sweep this low, come to internal range liquidity. What can we expect? Expect, keyword expect, not predict, because we don't know that for sure. What do we expect? Well, we expect this external range liquidity high to be our draw liquidity, and that's what we're going to be, that's our bias to be going into, next couple days, or, depending on how volatile it gets. Okay, now it's just before market open, and I'm like, okay, I'm very bullish right now. Looks like we have a good setup. I've identified the higher time frame model. Okay. All right. Now zooming into the 1 hour. Nothing really. It's just the same stuff. Okay. zooming into the 15 minute, because our goal now, after getting our external range model, identifying it, we zoom in, try to find a fair value gap, and find an internal model. So what do we have here? Well, we have another range right here, okay, on the 15 minutes. So this becomes our, well, right here. Yeah, we'll just do it right here. But this becomes our high. We have another high right here also. That could be our drawn liquidity for our internal model. Okay. So see what we're doing here? We're aligning our internal drawn liquidities with our external draw. So we're not only, so yeah, this is our drawn liquidity for our internal model, and it aligns with our external draw that was on the 4-hour. So that automatically higher our probability of our trade when you align that. Okay, so what do we got here? We got a sweep, a 15 minute. What do we want? We want to try and find a fair value gap so we can see it get retraced into. So let's see what happens. See if we get this move. We get a crazy big move. Let me see if there's value gap on the 5 minute. There's nothing much here. Okay, get a retracement back down. Trace back to discount. Go back up. Okay, and I do want to check here real quick. If there was an SMT. Okay, for those who don't know what an SMT is, it's basically a divergence from on NQ and ES. So for instance, let me show you guys an example. So let's say NQ comes down and takes the low, right? And then let's say ES comes down and doesn't take the low, right? So this is ES and this is NQ. So NQ clearly took the low, ES didn't. So that's a divergence in between the two pairs because they're corresponding pairs. So that would be what we call in ICT concepts would be an SMT, which is a form of manipulation, and it can be a very good confluence to biases or trades. So that's what you call an SMT. Or reversed, whenever ES takes a high and NQ doesn't, you know, it's either one. But okay, I'll make a separate video on that and really go in depth with it. But that's for another time. So going back to the chart, so I was looking for an SMT, and there was an SMT on ES. So I basically want to show you guys this actually. I want to show you guys this. So let me see. Going to ES. Okay. So in this time, right? In this time, you can see it's aligning both pairs. ES took this low. ES took this low, but NQ didn't. Okay? So that would be an SMT. And after seeing that, right? After seeing that, on the 5 minute, it automatically made me, you know, give me more confluence to my trade. And so I was very confident we were going to go to this external high and this high also. Very, very confident. So what do we do? Wait for a fair value gap to form. We happen to get one right here. Okay. A 5 minute, write it out. Jeez, my typing is terrible. Been terrible every single video. Oh my gosh. Okay. Okay, we got a 5 minute fair value gap. And what do we do now since we have a 5 minute fair value gap? Well, we look for the same exact thing. Huh? The same exact thing? Yeah, we look for the same exact thing. Time is fractal, and we're aligning our external model with our internal model, right? The same thing that's happened on the daily, the same thing that's happened on the daily, right? A retracement back up into external range liquidity for value gap, okay, with a sweep of liquidity, okay, heading towards external range liquidity. And then zooming into the 4 hour, which we're on right now, what do we want to see happen? The same exact thing. Okay, and the same exact thing does happen. Create a fair value gap, retrace back into it, create a low, retrace back up, create a high, come back into the 4 hour fair value gap, sweep this low with the reaction off of it. So now we can expect this to be our drawn liquidity. This will be the target. Okay, so this is our external model. Okay, now we're zooming in, right, to find our internal model. Okay, no fair value gap here. Okay, at open. Okay, we zoom in again. Because remember, guys, this is our internal range and our internal model right here. We have our highs, disrupt the low, blah, blah, blah. Okay, zoom in to the 5 minute. We have displacement. We have an SMT to confirm manipulation. Okay, everything in price that's needed to happen has happened, right? We've traced back to discount in this leg. Okay, so now I'm expecting price to just boom up, right? Everything that's happened needs to happen. Price will tell you when it needs to go, right? It's already programmed to happen. You just need to figure out when that time is. That's all it is. Algorithmic. It's already programmed. It's already in the script. It's how the market works. It's how it moves. It's already programmed to do exactly what it needs to do. You just have to figure out when it's going to do that move, right? And that's what I'm here to tell you and inform you about. So we displace up, create a 5 minute value gap, a higher time frame for value gap. Now we're zooming into the 1 minute, right? The 1 minute. Yes, the 1 minute. Okay. So mark out this high. Right there. Okay. Now since we're on the 1 minute, what are we waiting for? What are we waiting for? Just give you guys a few seconds to figure that out. What are we waiting for? The same exact thing as the higher time frame of what it showed us. So what's that? Well, we're looking for a retracement back up, making a high, coming back down, sweeping a low, and then a break structure back up with a fair value gap, blah, blah, blah. Okay. Heading towards our external range liquidity in alignment. So let's see. This is like kind of what we're looking for. So, all right, make a high, come back down, sweep this low, and then bam, head towards the external range in this model in itself. Okay. All right. So let's see what price does. Dump down, come down to this fair value gap. Right. Seem to be respecting it. Oops. All right. Seem to be respecting it, holding the 5 minute also. We're displacing up. Some people might get scared. They might FOMO. They're like, oh my gosh, I'm going to miss out on the huge leg up. I'm going to miss out on the huge leg up. Oh my gosh. No. You have to be patient. And if you have to be patient because that's literally what causes you to just lose a bunch of money. Okay? Okay, wait. You wait. And I didn't take the trader here because there was just way too many for value gaps, so I waited. We create a low. Okay, we create a low. Yeah, we're reacting off this for value gap. We could just go straight up. We could. And I could just not take a trade at all. We could just do that and just go to the fucking moon. But I wait. And I wait to see what I want to see. And I'm being disciplined. Okay? So let's see what happens. I'm waiting for this low to be swept. I'm telling myself, I'm waiting for this low to be swept. Okay? Alright, and then I want it in this range. If we dump down, I want my entry to be below in discount. In discount, because that's where if you take a trade in discount of a range, it's going to be highly, highly, highly more probable in your favor, or turn out in your favor if it's in discount. Okay? So, waiting for that low to be swept. Gets swept, right? It gets swept. Now, in this model, in this range on the 5 or the 1 minute, okay, this becomes my external, my internal range, or in this model, this external range, okay, and this would be my external that we saw in the 15 minute, all right. Now, what is price selling us right now? Well, it came down, swept this low like I wanted, turtle soup this low, and we retraced back into this fair value gap also. That was in discount. So price has reached discount and is in discount, right? So price has done everything that it's needed to do for us to expand to the upside. There's no reason for price to go lower, right? There's no reason for us to go lower. Sorry, give me 1 second. I'm trying to see if there's an SMT right here. Okay, there wasn't. But there's no reason for us to go lower. Everything that's happened has happened that's needed to happen. Okay. We have a retracement back to discount on the 5 minutes. Right here. Expansion higher. We have an SMT. We displace up. We zoom in again. Time is fractal. We look for the same thing that we've looked for on the higher time frames. This becomes our external range liquidity. Okay. Come down into this 1 minute for value gap. That's in discount. Okay, you could have taken your entry there, but I took my entry here. I turtle soup. It came in turtle soup this low. A turtle soup is basically whenever you're in a trend and it creates a low and it comes back and wicks this low, takes the liquidity and then retraces back higher very fast. Essentially, that's turtle soup. I'll make a separate video on that so you guys can understand it more. But okay, so price has done everything that's needed to do, and in my mind, I'm just very confident in this trade and very, very confident. So I entered here, right? I entered here, my TP's at this this high, this external high, and I put my stop just below the low right here. So what is that in terms of risk to reward? That is it's a 3.42 RR. That is insane, right? That's insane. Why is that insane? Because for people that don't know what a 3.42 RR is, risk to reward, or 3 RR, that means it's a 1 to 3. So that means, let's say I have a 1 to 3 RR, I win a trade, right? And that means I would have to lose 3 times in a row just to go back break even from that trade, right? So that's great risk to reward, 1 to 3 on this trade. So I bought it here, okay, went up to this eternal high, right? Aligning with my external range highs. It's in alignment. And since price is fractal, I only targeted this high because, you know, you could target all these highs if you wanted to, you know. It's completely up to you if you wanted to get like a, oh my gosh, like a 7 RR. But you know what? It's completely up to you and the type of trader you are. But me, I'm looking for consistency, and I'm just looking for, just quick and easy work, I'm not looking for these huge bombastic trades, and yeah, I'm just looking for simply just, you know, I'm not looking for crazy trades, just consistent, nice trades. So at this point, I was confident. Okay, come back up, boom. Okay, we get a big dump down, right? At this point, a lot of traders would be scared, and I'll admit I was scared a little bit too when I saw this. But I knew in the back of my mind, since this low right here is a protected low, so what that means is this low swept liquidity, so automatically becomes a protected low. Excuse me. So price shouldn't come back down to this low, at least in this time frame. So I was very confident, I was just gonna come back up and go towards our target. So it comes back up, and we just smashed through the high. So this is the trade that I took on Monday, and exactly this was my thought process during it. And I just want to show you guys something real quick. That's the wrong thing. So this is a market maker buy model, right? It might not look pretty like the example I showed you earlier, but this is a market maker buy model. All right. So come down, create a low, sweep the low, and then we'll retrace back higher, right? So if you can use your imagination to your fullest, on the lower time frame it would look a lot better, like on the 15-second or 30-second. But use your imagination, try to imagine what the example I showed you, and try to like align it with this. So this is a model in its own, a market maker buy model in its own. Okay, going to the 15-minute. All right, this is a market maker buy model on its own, right? Oh my gosh, I lose my mind. Okay, because what do we have here? We swept liquidity with a retracement back into an imbalance, and that's what I said in the beginning, right? We're heading towards the original consolidation. These buy-side liquidity levels. Okay, and zooming out to the 4-hour, which is our external model that we aligned with our internal model. What do we have here? We have also a market maker buy model that is happening right now. Okay, which gave me my bias. Okay, displacement leaves a fair value gap, leave a low, sweep the low. What can we expect now? We can expect a retracement back up to here, right? And that would be our market maker buy model. This happens on every single time frame, folks, and this is how I get my daily bias for the day, for the week. I don't necessarily get my daily bias for the week, but I just do it daily. But like if I was a swing trader, I definitely would do it for like the monthly or weekly. But I'm an intraday trader, so I just need the daily, a 4-hour for my bias. But and then going out to the daily, the same exact thing, Make a high, come down, internal range liquidity to external range liquidity, come down, sweep a low, the low right here that's on the 4-hour, and we can expect a retracement back up like this, right? That'd be the market maker buy model on the daily. Time is fractal. Remember that, ladies and gentlemen. Time is fractal. Everything that happens on the daily happens on the 4-hour. Everything that happens on the 4-hour happens on the 1-hour, 15-minute, 5-minute, 1 minute, 15-second, 1 second, everything. Remember that. So that is what I wanted to show you guys on the trade that I took and how I use market maker buy and sell models in my trading and how it's really transformed my trading and how it is today. And I was able to get another funded account off of it. I'll have to somehow maybe I'll put the I don't know if I be able to. I'll have to see if I can during the editing if I can put in the screenshot of the certificate. But anyways, yeah, it's really changed my game of trading, and I really wanted to bless you guys with that information. And um, yeah, and I glad to be back, man. Feels good to be back. And I hope you guys can backtest this a lot and really put it into consideration and to see it work in itself. All right. But hey, I hope you guys have a wonderful day. Happy 4th of July to everyone. I hope, or if you're watching this after, I hope you guys had a good 4th of July. And hope you all have a great and wonderful rest of your day or night. And yeah, you guys have a good rest of your day, man. And I'll see you guys in the next one. Peace.